Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. And boy, do we have a video today. We are going to be talking about Meta, aka Facebook, and why after hours today it's getting absolutely obliterated. It's down about 15%. So we're going to be talking about what's going on and answering this main question of, is now the best time to invest in it? So I hope you guys all enjoy it. If you guys do, like, subscribe, and if you want to learn more about trading and investing in the market, I highly recommend going on and checking out my swing trading and trading school, where you guys can learn to trade and navigate the stock market. Check it out down below. You guys can use code HALF-OFF to get 50% off, and I'll see you in there. And guys, let's jump into this here. So looking at Meta's chart here, as we zoom out, you guys can see Meta has had this great upward trend where the stock has gone from lows here at about $87, hitting highs at over $500 a share, which is an incredible move, you know, beating the S&P 500, the Dow Jones, NASDAQ, all that stuff. And, you know, as we continue to zoom out, you guys can see that Meta went from about $400 all the way down to those $87 areas. This was during a time where pretty much Meta wasn't doing the greatest. For the first time in company history, they saw a decrease in daily active users. For Facebook, they had issues with advertisements. And guys, then AI, then technology, and everybody was buying up tech. The stock went from 87 all the way up to $500, which is an incredible move. But looking at the chart today, what do we notice, right? During the day, the stock was just kind of generally selling off from about $510 all the way to $480. Really wasn't doing much. And then after hours, this thing got crushed. Went from $500 all the way to lows at about $399 a share, selling off about $74 a share, which is crazy. At one point, it was about $100 a share, which is a lot. So why did this happen? And should you buy Meta stock right now? So Meta, as we look at this here, I'm using Moomoo for all my news and stuff. They're fantastic. I'll put them down below. But what happened is Meta released an earnings report. So this is when the company comes out and they give you all the details about the company. They give you the good, they give you the bad, they give you everything. And honestly, the thing about this is they beat expectations. And let me show you that. So as we scroll down here, you guys can see that the revenue and profit exceeded analyst expectations. But where we had the issue was disappointing projections for the second quarter. This led to the stock sell-off here. So as we look at it here, you guys can see, and we had a nice 27% growth, which is great. You know, that brought in about 36 billion, which is good. You know, all these increases, right? You guys can see we had ad impressions up 20% year over year. Revenue up, like I said, 27%, beating expectations. We saw, you know, costs and expenses go up a little bit, which is normal, especially if you have a growing company. That went up 6%. So all of these good, you know, fundamentals, all these good things going on with this company. And then the company came out and said, hey, quarter two, we're not going to have the greatest, right? We may have a little growth. Let's kind of see what they said here. So we expect the second quarter of 2024 total revenue to be in the range of 36.5 billion to 39. Our guidance assumes foreign exchange currency is a 1% headwind to year over year revenue growth based on its current exchange rates. So one thing here, we expect the full year 2024 total expenses to be in the range of 96 to 99 billion, updated from the prior outlook of 94 to 99. So they're expecting possibly a little more expenses, which is all right, you know. Let's continue this here. Let's see if we can see. All right. Quarter one was a good start to the year. We're seeing a strong momentum with family of apps and are making important progress on our longer term AI related lab. So really investing into AI technology, all that stuff that they do. But where we see the issue is the Q2 guidance. So does this mean, you should buy up Meta? Well, for me, I always think, stocks go up, but they also go down. This is normal. This is healthy. Companies, they have good quarters. They have bad quarters. If you're getting nervous about single quarters, that's where you can get shaky. And for me, guys, I've been buying Meta for a while. I'm a huge believer in this company. I called this stock out when it was under $100. I thought this was a massive for sale sign under $100 a share. Yeah, the stock's going to be near and around 418. Does this mean it's overvalued? Maybe in the short term, especially if we do have a weaker Q2. But I do think in the grand scheme of things, any action in the stock market is often an overreaction. Just because a company has bad quarters doesn't mean the company's doomed for the year. So for me, I might use this opportunity to buy Meta at a cheaper price, hold it, and just see what happens with it. Meta is a growth stock, so it's going to be more volatile than just the general S&P 500, Dow Jones, and NASDAQ, and a variety of ETFs. So it's going to be a little more risky, a little more volatile. And for me, guys, I'm going to use this opportunity to buy more. Buy low, sell high. That's my plan. And that's kind of everything going on with this. So, guys, hope you guys all enjoyed this. If you guys have any questions, ask down below, and we'll see you guys in the next one. Take care.